Hello, everyone. This is Justin Smythe from nextbigtrade.com. This is your weekly focus watch list for February 2nd, 2024. This week's watch list will focus on shorting opportunities in two different areas, with the market having a lot of negative things happening underneath the surface and a potential correction looming. The short side might actually be a higher percentage side for winning trades, as we start to potentially move into that correction. And actually this year, since this rally has been a very thin rally, there's been a lot of stocks that have moved lower during this rally. So the short side has actually been a fairly high percentage, winning side to trade on already. And that's just going to increase if the market rolls over into a correction. So starting off with Apple, this would be a major blow to the market if Apple rolls over here, since Apple is such a large component of the stock market. And you can see what happened at the end of December, where Apple tried to make a higher high right at the end of the year, and then was unable to do so. And unlike, most of these other mega cap tech stocks have gone on to make much higher highs than their July high, but Apple is the one that hasn't. You can see how it's made a lower low here. You can see how it's dramatically starting to underperform the S&P 500. And being such a large component, this is very interesting. It did have a negative reaction to earnings this week. It was able to bounce off the 30-week moving average so far, but it's spending a lot of time testing the 30-week moving average. And if it does, it's already lost the 10-week moving average as of this week. So if it does continue to roll over, we're going to start to move into stage 4. On the daily chart, Apple does not look good. You can see the heavy volume selling after earnings this week. And again, we're tapping that 30-week moving average. We break below it. This could be a good short opportunity for this stock. Obviously, extremely liquid stock, but really a major failed breakout here, where it was unable to make a higher high from its July high, and then acting negatively since. It did have this little short rally a couple weeks ago, but then got slammed back down this week and is really set up to break down here. Cisco is the other mega cap tech stock that's acting extremely poorly. You can see the negative relative strength here against the S&P 500. It's starting to move back below that 30-week moving average here, and it's had a couple high volume sell-offs recently. On the daily, you can see this monster gap down on massive volume. It recovered the entire gap while the market continued to rally, and then sold off again this week. Potential to roll over into stage 4 here. The other sector that is acting extremely weak all of a sudden is the regional banks again. And there's a couple major ones. We'll start out with USB. You can see how, look at this, downtrend from the December highs already kind of forming here, starting to penetrate the 10-week moving average last week. So these would be kind of like short opportunities off of the 10-week moving average. You can see it's starting to show an increase in volume here on the downside, and you've got the negative relative strength against the S&P 500 as well. On the daily, again, look at you're starting to retest that 10-week moving average, and barely any bounce at the end of the week this week. CMA, same type of thing, refusing to make a higher high, negative strength against the S&P 500, and starting to see some high volume selling at the end of last week. RF is showing even worse relative strength. It's already below the relative strength line against the S&P 500. You can see the downtrend here penetrates the 30-week moving average actually here before bouncing. And then on the daily, this one's set up to really break down here with more weakness next week. You got heavy volume coming in here. Finally, ZION, another one, major relative strength weakness, big time selling volume last week, or at least it's heating up last week. This one got clobbered during the regional bank crisis back in March on heavy volume. Then on the daily, you're selling back down to support, 30-week moving average, but if you break below here, there's not a lot of support going back into 2023. So all of a sudden, this bank could be in major trouble as well. So a couple areas to look at. The market would definitely not like it if Apple rolls over. And again, with these regional banks, if financial turmoil continues to heat up, that would be a big negative for the market as well.